All right, guys, welcome back to Freedom Finance with Lanny. And we're really going to get right into it. I'm here to really talk about the Vanguard trifecta, you betcha, 3 ETFs that'll hopefully help you succeed as an investor, beginning investor, and all investors alike. So I said in the beginning, we're going to cover 3 Vanguard ETFs. And I talked about it, I think, in my last video about my how I'm investing in 2023 video. And these are 3 Vanguard ETFs that I'm buying either every single week or every single day. So if you follow me on Twitter, I discuss this all of the time, but today I really want to show you each ETF individually, why some may work for certain types of investors, why I like not 1, not 2, but all 3 ETFs, and why I am buying all 3 ETFs. And maybe at the end of this video, you'll be able to make a decision with what you want to do with your hard-earned saved dollars to help get you on that path to financial freedom. The first big ETF, obviously, that we'll quickly dive into here, guys, is none other but one of the GOATs of the ETF world, which is Vanguard's S&P 500. Ticker symbol is VOO. And again, an exchange-traded fund or an ETF is really just a passively managed basket of stocks or funds that's actively, and you can buy and trade that ETF during the day, as opposed to a mutual fund, which you could only purchase at the beginning or at the very end of the day. So what is the S&P 500? They are the largest 500 companies in the US on an exchange. Think of companies such as Apple, Tesla, Google, Facebook, or Meta. Those are really the largest companies, and that is what's composed of within the S&P 500. So why buy an ETF? Well, it's a way to track a basket or again a selection of stocks that really fit your criteria. Here the S&P 500 ETF VOO just really is going to track how the top 500 companies are doing. It'll track the S&P 500 index. And that index has historically gone up anywhere between 7 to 10%, depending on which case study was performed. So this is a very well a proven path to reach financial independence, to reach retirement, whatever you do want to call it. So that's why we're definitely talking about this ETF. Now the ETF in and of itself, at Vanguard, which again, you could buy this ETF pretty much on any brokerage app. I personally use the SoFi app. The link below is in the description because that allows me to buy it every single day automatically and at partial shares or fixed dollar amounts. So this ETF, again, VOO, again, V is 500, so you got 500. Somebody put that out on Twitter, and I thought that was really cool. So the VOO ETF has an expense ratio of only 3 basis points or 0.03%. So what this means is every $1,000 is literally only a 30-cent expense that's being taken out for Vanguard to passively manage this ETF. And then when you actually dive in just to the VOO itself, in the last 10 years, its return on average a little over 12%, which is fantastic. Again, it has a dividend yield currently, which again is a dividend payment that you can get from this ETF quarterly. It's about 1.65%. And historically, the last 5 years on average, the growth of that dividend is actually a little bit over 6.6%. So you've got a 1.65 modest yield with about a 6.6% growth rate, which now is on track for inflation. So just keep that in mind. So as a new investor, this is a great ETF to buy. It's a great and inexpensive way to own the top 500 companies. Again, I've talked about this strategy. You can automate this, buy it weekly, monthly, and really automate your way to easily $1 million over a certain period of time. So personally, I'm buying VOO every single day. I'm doing $60 a day in my own brokerage account. Showed the video on how to set that up, but again, I'm buying $60 a day or $300 a week into the S&P 500 ETF of VOO. So the next ETF I quickly do want to get into is now more towards the investor that wants a little bit better yield than 1.65% that VOO sports, and wants a little bit better dividend growth rate than the 6.6% that VOO does sport. And this one is called the Vanguard Dividend Appreciation ETF. The ticker symbol for this one is VIG. This ETF, some of the top companies that are in this ETF is your Johnson & Johnson, your Microsoft, your JP Morgan, Home Depot, again, higher dividend growth payers, because it's called dividend appreciation. So you're not looking just for a little bit better yield, but companies that historically grow their dividends at a high rate. The dividend yield on this ETF is closing in on 2%, and the 5-year average dividend growth rate is over 9%. So you're getting better yield and better dividend growth than VOO. And the total return over the last, 10 years on average per their at least website argues that it's over 11%, per year for VIG. So slightly less than VOO, but again, from an income mindset who wants that faster income growth, as you want to reach financial freedom / financial independence, VIG could be a great alternative if your outlook is, maybe 10, 15 years out. Last but not least, we'll dive into the third Vanguard ETF that, again, my wife and I both are buying each week, each Monday, actually. I'm doing somewhere between $250 to $300 per week on Mondays. My wife is actually buying 2 shares. That's Vanguard's High Dividend Yield ETF, or ticker symbol is VYM. So unlike VOO and VIG, VYM is really more focused on the higher yielding stocks, whereas this dividend yield for this ETF is about 3%, so almost 2 times VOO and definitely at least 1% higher than VIG. This ETF has about 400 stocks in there, and they share a lot of the same names, but when you think of higher yielding stocks in here, you're talking Pfizer, AbbVie, a lot of companies in that healthcare pharmaceutical space, as well as ExxonMobil, Johnson & Johnson, and plenty other dividend aristocrats and dividend kings jam-pack this Vanguard High Dividend Yield ETF. Wanted to mention, with this ETF, the expense ratio is 6 basis points, or 0.06. That's the same as actually VIG. What that means is every $1,000, again, is only 60 cents from an expense standpoint that goes off to Vanguard. Now, the average return for VYM has been a little bit north of between 10 to 11%, so slightly lags VIG and VOO, which, if you recall, VOO is 12%, VIG was 11%, so VYM is slightly a step back. But again, the alternative is this ETF, again, VYM, is really geared towards those that want to pursue financial freedom a little bit quicker than VIG, want that higher yield, again, close to 3%. On the dividend growth rate side, you still have that at over 6.2% over the last 5 years on average. So you're getting higher yield, similar growth rate as VOO, albeit not as strong as VIG. But again, you're really keeping up with inflation at that point. We've been buying this ETF pretty much every single week since probably middle of 2020, so almost hitting the 3-year mark. We have no plans on stopping, that investment pattern, that automatic investment strategy. Again, it's adding to the passive income total each and every week. So, at least in my account on the SoFi app, I'm doing, let's just call it 300 a week into VYM. We're doing $40 a day into VIG, so that's $200 there. So that's $500 plus $60 a day in VOO. So I'm at $800 automatically going into these 3 Vanguard ETFs. So what does that mean on like a weighted average basis? What does my $800 do? Well, that's over $41,000 that if I set this and forget it, that's $41,000 over the course of a year that's going to be invested. And the average, or the weighted average dividend yield on that's about 2.2 to 2.25%. So, you're getting a little bit better yield in total because of the VYM. And then on the dividend growth rate side, it's over 7.1% on a weighted average. So in combination, you're well over that 9% dividend factor. So the dividend growth rate is obviously gets a little bit higher because of the VIG component. So in total with that, we're adding about almost $18 per week in forward dividend income from just what I'm doing in my account. That's not even including my wife's VYM purchases. So over the course of the year, if I'm able to continue this strategy, I should be in between $900 and $1,000 of dividend income that I'll be able to add in 52 weeks alone by investing in these 3 Vanguard ETF behemoths. So there it is, guys. 3 ETFs, VOO really for those beginner investors, new investors that just want to set it and forget it and automate their way to freedom. Again, you can continue to do this. You're buying the top 500 companies at probably one of the lowest expense ratios out there. You're creating a form of dividend income from that ETF with a significant growth rate of over 6.6%. VIG is one of those where, okay, if you've got a shorter horizon, but you still want that bang for your buck, that total return, VIG obviously has the high dividend growth rate component to it as well. So you'll get that higher dividend growth, while you're nearing or in, your financial freedom years, as we'll call it. And then VYM, really for those that are trying to pursue financial freedom faster, giving you that yield, plus pretty much the same dividend growth rate as VOO. I'm in a combination of all of them. I want a little bit of return. I want a higher dividend growth rate than what VYM provides, but I want a little bit more yield than what VOO and VIG provide. So that's why I'm buying all three ETFs. So what do you think about the Vanguard strategy? What ETFs do you like? What are great for investors that are just starting out, those pursuing financial freedom, and those that want to get to freedom fast as heck? Let me know in the comments. And again, if you appreciate this video, definitely please subscribe to the channel. I truly appreciate it. What other videos do you want to see that I can help dive into that'll help you on your personal finance journey? Thanks for rocking with me. This was Lanny from Freedom Finance. Catch you on the next one.